we get ready to get into another very special address, I have the opportunity of welcoming onto this dais a leader who works closely with businesses, institutions, navigating transformation, growth, and long-term strategic decisions across industries. Let's put our hands together and welcome onto the dais Chairman, Bain & Company India, Mr. Karan Singh.
I can't see Anuj here. Anuj, thank you very much for inviting me. There you are, Anuj, thank you. It's a pleasure to be here, and it's great to follow the secretary. I enjoyed listening to you. What I plan to do in the next 20-25 minutes is I'm going to walk through a few of the factors, the factors on the left-hand side of this page to share what we believe is some of the key drivers for India's outlook over the next decade. The headline for us at Bain & Company is that we remain extremely bullish in an environment which is extremely unpredictable and going through a lot of uncertainty. For us, there are 4 key geographies globally that are the hotspots for us. Beyond India, it is the US, it is Saudi, and it is Japan. The full potential for India in the longer term is dependent on how well we make some structural shifts as you look at some of the points on the right-hand side of this page. Manufacturing salience has to increase by about 10 to 15 points. This is both a necessity because we need to create about 100 million incremental jobs by 2030 or 2032, but this is also a huge opportunity as we look at capitalizing on trends like China plus one or Europe plus one. We have to make a shift from domestic champions to global champions. There are very, very large profit pools where India is participating in an extremely marginal manner. When I look at auto, I look at electronics, I look at chemical pharma complex, these are $2, $3, $4 trillion opportunities, and India's share is 1, 2, or 3% only. We need to be thinking about global scale and take the benefits of global competitiveness as well. For sustainable manufacturing in India, we have to focus on design and innovate in India. And this is where I will come back and saying, looking at taking a page from the China playbook would be something we should look at. Investments in India have to go up by another 5 points. Today, the government in public infrastructure is spending a significant amount on public infrastructure. Some of the larger groups are also doubling down on investments, but there is still huge headroom for us to invest a lot more for growth. We can attract a lot more foreign FDI into India, and we can get much more broad-based investments that India requires. Last but not the least, social sector is on the agenda, which is the good news, but we need to see skilling at scale, skilling and reskilling. And from a health perspective, we need to move beyond curative health to preventive health, given the silent NCD or non-communicable disease epidemic that we are all facing. The macro situation, the macro factors in India have actually improved. This is a complex page with a lot of data, but just focus on the last 2 columns. Overall, as the secretary said, we are in a little bit of a Goldilocks period. Growth is very robust, inflation is low. We are seeing the government focus on fiscal and debt consolidation, which is extremely prudent and well received. And we are starting to see the tailwinds from global FTAs and the trade agreements. The most significant one for us actually is Europe. When Europe imports $3 trillion and India is exporting only 79 billion into Europe, there is a tremendous opportunity ahead for India. The 3 factors we got to keep in mind as we look at the bright side of what's happening on the macro is the exchange rate and the rupee, is is the current account deficit and hence the focus on energy security. And third is net FDI, which unfortunately is today zero. The growth outlook, the GDP growth has been very robust. We've rebounded pretty well from COVID. We will end this year in the ballpark of 7.5% real GDP growth. The consensus forecast going forward is between 6.5% and 7% growth over the next 5 years. The question for us is how do we add 100 basis points or 150 basis points to take us to the 8.5% that we all absolutely need to aspire to. As the Secretary said, Viksit Bharat is a laudable aspiration that India has taken on. But it is a pretty significant task ahead. We're talking about a 6x increase in per capita income growth. We're talking about a 5x increase in GDP growth over the next 2 decades. At the left-hand side of this chart, you see how difficult it has been and how few countries there are that have achieved a sustainable 8% growth going forward. The shape and the structure of India's GDP has to evolve. As you look at what has happened with China and Vietnam as an example, the green portion, which is agri, has come down quite substantially. So we need to be thinking about dramatic improvements when it comes to agri productivity. The gray portion in the bar also has to go up, which is manufacturing, and again, for the reasons of job creation. India, as the Secretary again said, India's single biggest driver is our consumption spend. This chart is actually pretty interesting. It looks at 2005, 22, and 2032 projected. It shows the profile of our household structure and how that is changing over time. If you look at what the shape of the three time periods, we're going from an Eiffel Tower shaped to a pyramid to a diamond. The first shift from 2005 to 2022 has already taken place. But the most significant shift is a shift from 22 over the next decade. If you look at the pink and the orange, we're going to add 100 million households in that strata. And the reason that is significant is the move from the pink to the orange. When you look at goods and you look at services, the multiplier is 2.5 to 3.5 times. That's the rise of aspirational India. And if one does the math of what that means on consumption spend, we're talking over 5 trillion in 2032-2033 time period. The insight again is that is greater than today's GDP in India. Beyond category penetration, which we are seeing across multiple categories, we are seeing a huge trend towards premiumization. What I've shown you on this chart here is smaller ticket items to much larger capex items in real estate on the right-hand side. So if you look at the delta between how premiumization has occurred, it has been quite significant. There's a fascinating report that Morgan Stanley published just last year or a year before that showed that India has benefited from $10 trillion of wealth creation over the last decade. The $10 trillion of wealth creation has come from real estate, has come from gold, and has come from the stock market. So there is consumption power in the higher incomes, and people are using that to spend, and hence we're seeing the trend towards premiumization. We are also seeing new categories get created. It's fascinating to look at some of the data here, but the more interesting point is how quickly and how at scale these categories are being created. If you look at it's not only about new goods that are being created, but if you look at also new channels that are being created. Quick commerce did not exist a few years ago. If you look at the last run rate of Blinkit, this will be over $12 billion on a run rate basis for this year. $12 billion that did not exist 5 years ago. extremely substantial. The secretary talked about this as well, so I won't drain this, but the point I wanted to make was India is complex. We have to de-average and disaggregate India. Unilever has done this the best in talking about the WIMI strategy. WIMI stands for Winning in Multiple Indias, is how do we customize our strategies to multiple different micro markets that we focus on. So in India, we see the likes of a Norway at an $85,000 per capita income. We see the likes of a Poland, India 1B. We see the likes of an Indonesia, and we see the likes of sub-Saharan Africa. The second way to think about WIMI is there are certain states that are truly driving and powering India. If you look at the chart on the right-hand side, it's and the two axes on the horizontal axis is the per capita GDP. On the vertical axis is the real GDP growth in those states. The breakthrough states, there are about 8 to 10 breakthrough states on the top right part of the chart. Those are the states that are powering India. And if you look at the bubble size represents the population of those states, which is equivalent to the population of many different countries. So WIMI again can be manifested in terms of which states, and many clients of ours will focus on which states disproportionately. We have huge distinctiveness when it comes to customer segments. These are very large and customer segments that have very distinct needs and very different behaviors. It is fascinating when we work with the leading e-com players like a Flipkart or the leading banks like a State Bank of India, for example. You're talking about firms that are dealing with 400, 500 million customers. And they're looking now at what's the power of AI to work on mass personalization. Let me double click a little bit just on one segment to show how distinct the needs and the behaviors are. I'll just pick the ones for Gen Z, given how relevant it is for the next 5 to 10 years. Gen Z in India have very distinct needs. They are ambitious. They are looking for luxury. They are very socially adept in terms of social uses of media and are politically involved. If you look at some of the data on the middle part of this chart, they are extremely optimistic about the future and about the belief in the government. Also quite striking on the right-hand side of this chart, they spend almost 5 hours a day on digital content and on the digital medium. And they are not only focused on India, they are also global followers. Very distinct need states of this population. But this has been a reality in terms of value creation for the leading consumer companies. What you see on the left-hand side of this page is the value creation by consumer products companies in the last decade. What you will notice here is most of the leading consumer companies have grown their bottom line faster than the top line and have seen market caps increase between 3 and 13 times over the last decade. So the trends that we've been talking about has manifested themselves in terms of the performance of the leading consumer companies. On the right-hand side is the market cap delta over 2010 and 2024 of the leading real estate companies. Most of them are clients. Barring the two at the bottom, we've seen double-digit market cap growth for all the real estate companies. There is a massive flight to quality. There is consolidation. But this shows the level of demand and the value creation that many of the leading real estate companies have enjoyed in India. As an aside, when we started working with Godrej Properties in 2010, they were 3,500 crores. Today, they end up at 55,000 crores. So the market is rewarding the growth that we've been talking about. The second very significant trend in India, as we all know, is the digital economy. We have leapfrogged from the analog to the digital world. We believe in a study we did with Google that this is going to be about $1 trillion by 2030. The India stack has been an absolute game changer. And if you look at the The data right on the digital stack, when you look at Aadhaar, you look at the DigiLockers, the UPI, extremely significant. This is now being taken out to about 40 different countries. The real value will come in how do we customize this stack to take it to the agri stack or take it to the health stack. The data on the right is also quite startling. If you look at the use of digital in multiple different, in how we live our lives, it's also very, very large numbers. I'll just pick one number there. India's shopping online is now close to about 300 million. That's growing at about 20% an annum. But what is interesting about that number is that in the last 3 to 4 years, 60% of that growth is coming from tier 2 and tier 3 geographies. So there is massive buying power and purchasing power beyond the top metros as well. The UPI, the Universal Payment Interface, has also been a huge transformative factor when it comes to payments. If you look at the UPI growth compared to credit card growth, it's about 10 times that amount. We're talking about almost 3 trillion in terms of UPI growth. And on the right-hand side, we would expect UPI is leading to cash displacement in this economy. The other point that I wanted to make on the digital side is the vibrant digital insurgent that we have in this country. And we have a flywheel which is actually spinning. It starts with a highly entrepreneurial young population on the top left. The government has been very supportive of startups in India. Capital that has been deployed into startups is about 100 billion in the last 5 years. And thanks to the capital markets, many of those firms have gone public and unlocked huge value for their investors. So this ecosystem is quite set, and we think will continue to thrive, going forward. The most defining trend that we see in the next 5 to 10 years is going to be about Gen AI, and that's the reason why we had the AI summit in Delhi last week. India, to be honest, has been a little bit behind in the start, but we are very much in chapter 1 of what happens on Gen AI. The India stack, when it comes to the AI stack, has moved quite dramatically even in the last year. We've seen huge amount of interest and investments coming on the data centers. On the GPU side, we are quite behind, and the lead there is driven by the US. We made huge progress with Sarvam on the vernacular large language models. But the opportunity for India is actually at the application layer. India has the opportunity with this large population that's digitally active of creating huge use cases. And we need to judge ourselves in terms of success here as being able to impact the lives of the common man. And that is the opportunity that we should be all thinking about. This is where India can truly lead when it comes to AI. What I've been extremely surprised about in the last 6 to 9 months is the rate of adoption with some of the real large leading players in India. If you look at the Reliance, who's taking on AI to be a Gen AI on an enterprise level, or you look at L&T that's taking 100 use cases, which their CEO, SNS, is working on with us, or you look at a Bajaj FinServ that's truly transforming financial services, it is astounding. But this is the opportunity that India needs to fully grab. There is also a concern here about what happens with jobs and what happens with IT. The irony is that the IT profit pool is actually expanding. It's not shrinking. So the question for the IT majors, many of them are our clients, is how quickly and how fast they can adapt to change their business models, to change their capabilities to go after this increased profit pool in the future. I won't drain this page, but I think it's important to talk about political stability that we are seeing. We are seeing massive tailwinds and a level of confidence with the government and especially since the wins we've seen in Delhi, in multiple state elections, in Bihar, etc. I think we are all quite familiar with the government's policies on inclusive development, focusing on Bharat and rural India and the MSME sectors, self-reliance, and looking at jobs and the value chains. I think the other significant thing to mention also is the need for reforms. We have started on that journey. We've seen moves in terms of GST simplifications, FDI liberalizations, what's changed in the labor codes, but we are all looking forward to a 1991 style reforms, and hopefully we will start to see a lot more reforms. The upshot of the entire crisis with the United States and the trade is that we got a massive push in reforms, but there is more for us to look forward to. Manufacturing, as I mentioned when I started off my address, is a critical area for us to focus on. On the left-hand side, you will see that manufacturing salience has actually fallen, which is unfortunate. So I think this is what India needs to focus on, and the PLI schemes, the production-linked incentive schemes, has been launched, but again with a little bit of a mixed success. But there are 6 priority sectors that the government's taken on to drive. These are very significant in terms of auto, in terms of pharma, in terms of medical devices, and in terms of electronics. I think we need to look at examples where PLIs and manufacturing have actually worked. And the best example by far is what is happening in electronics. It is fascinating where the profit pool for electronics in the global system is about $4 trillion. And in the next 5 years, we expect that to get to $6 trillion. India exports $25 billion of $4 trillion. So the government has really focused on how do we provide the right incentives to really drive up electronic manufacturing and being extremely smart about focusing on assembly, moving to components, and then moving to design. The chart on the right is quite revealing as well. In red, it shows our high level of dependency on China. So not only is there a big profit pool for us to go after, but how do we focus on ensuring there is resilience in India as well? A fascinating page that India needs to take a page out of the China book is what China has done from being a low-cost destination to actually catapulting to creating global champions on the back of innovation. We have our work cut out in terms of taking longer-term view, investing more behind R&D, thinking about the right enabling policies. We also need the right capital to be deployed in this area, the right talent to be brought back from global markets. But this is the opportunity that India needs to focus on, is how do we create global champions over $100 billion with the right global partners as well. Fascinating page that shows the profile of corporate India today. On the left-hand side, it shows that there are about 250 companies that drive the growth of India. 250 companies on the top part of this page drive 80% of today's growth. 10 conglomerates in India drive 20 to 25% of India's entire market cap. So we have a high level of concentration with few companies. How do we broad base that going forward? The conglomerates, most of them are our clients, are extremely bullish on the opportunity in India. And part of the reason is when they go back in the last decade, the value creation by the top conglomerates has been astounding. It's between 5 and 24 times. So when we look at the conglomerate leaderboard, most of the ones on the top 2 are going all in when it comes to investing in the core businesses, or what we call Engine 2, which is looking at new growths of new opportunities, new profit pools that they're looking to enter. And then you have the ones in the bottom 3, the ones less than 50 billion. They are all trying to play catch up and figure out, can they get to the top part of this chart going forward? Conglomerates, unlike what we're seeing in Japan or in Europe, are thriving is a huge driver of Indian economy, and the promoters of these conglomerates remain extremely bullish, which is a critical factor which will drive growth of India going forward. Corporate balance sheets in India also have improved quite substantially, and including that, our debt to equity ratios have come down quite substantially. CapEx is still highly concentrated by the top players. So the question more is, how do we broad base that and get a lot more investments into the opportunities that we are seeing? I think my time is up. I'll take another 2 minutes. There is a superabundance of capital that is that we are seeing from the private equity and the financial investors. And there is significant amount of dry powder that has been raised to be deployed going forward. And in the interest of time, I will just end with one page saying, as we look ahead at the growth opportunities, there are 3 factors we have to keep in mind. The first one is our ability to create jobs at scale. 100 million jobs by 2030 without factoring the impact of AI is a tall order. Healthcare, we need to think about how do we get ahead of this NCD tsunami when we have 100 million people impacted by diabetes and cardiac, and we have a curative system of healthcare. And last but not the least, the gains so far have been disproportionately at the top end of the spectrum. The top 1% controls 40% of wealth, top 10% controls 70% of wealth. So as we think about the next chapter, we need to think about a little bit more inclusive development and upliftment of those, even in the lower end, that are in the poverty strata. Thank you very much. Appreciate you having me.